Well, we would have had a worse financial crisis than 2008 had the Fed not come to the rescue of those banks. But that does not mean that they've fixed the problem. They haven't. They just bought some time while the problem got worse. But the banking sector, again, is much sicker than it was in 2008 when we bailed them all out. And all the banks that were too big to fail in 2008 are much bigger now. And so when they fail this time, it's going to be even worse. You know, the banking system was actually far sounder in 1929. You know, when we had the Great Depression, we didn't have any government insurance on bank deposits. You know, in all of the 1930s, only about 2% of all the bank deposits were lost due to bank failures. That was it. You know, and as a result of that, we ended up with the FDIC and all these big government programs. But the free market did a pretty good job during the 1930s, and the vast majority of bank deposits were safe. But today, because of the moral hazard of insured deposits and the reckless monetary policy of the Fed, the banking system is completely insolvent. And so there's only two possibilities. If you've got your money in a bank, there are only two things that can possibly happen. One is your bank fails and you lose a lot of money because the government doesn't have the money to make you whole, right? If one or two banks fail, okay, they can cover that. But if you have a major banking crisis, even a big bank, you know, like a Bank of America or Wells Fargo, if that bank fails, just the government doesn't have the resources. The FDIC is out of money, you know, right away. There's nothing there.
Today, we're addressing a pressing issue, the looming banking crisis in the U.S. economy. According to Peter Schiff, renowned economist and financial expert, the banking sector is in dire straits, with banks larger than ever and the system more insolvent than during the 2008 financial crisis. Schiff warns that the Federal Reserve's interventions have only delayed the inevitable, and when these banks fail, the repercussions will be catastrophic. With the banking system at risk of collapse, it's crucial to safeguard your finances. Consider diversifying your portfolio and exploring alternative assets like gold. Stay informed and remember to like, share, and subscribe for more essential financial updates. Don't forget to turn on post notifications to never miss out on our latest content.
So either your bank fails and you lose money. I mean, you lose deposits. You don't get 100 cents on the dollar. Or alternatively, the Federal Reserve comes to the rescue of the banks. And, okay, you get your money, but it doesn't buy very much. So either you lose your deposits or your deposits lose their value. Those are your choices. But you're not going to walk away from this whole. You're going to lose one way or another. That's why I've been advising people, you don't want to keep your money in banks. I mean, you got to keep some there because you got to pay your bills, but you don't want to keep any long-term savings there because it may not have any value. Either it's not going to be there or it's not going to buy much. So you got to withdraw it and you got to do something to protect it. Yeah, you know, well, during the early years, while I criticized Bitcoin, of course, people made a lot of money who just ignored me and bought it, right? You know, because I was explaining why it wasn't money, why it wouldn't work. And I was saying that as it went up from several $100s of Bitcoin to 65,000, right? So there was a big bubble in Bitcoin, and not just Bitcoin. There's 20,000 altcoins or some odd number. But yeah, a lot of people think Bitcoin is digital gold, but they're wrong. It's not digital gold. It's just a string of numbers. It doesn't have any of gold's properties that give it value. It's not a metal. You can't use it for anything that you could use gold for. Now, yes, it's copied the fact that it's fungible and divisible and portable and stuff like that. Yes, it has those properties, which gold has, but it doesn't have the underlying value, which makes gold a store of value. In order to be money, you know, you got to be a store of value, and Bitcoin has no value, so you can't store what you don't have. Now, Bitcoin has a price because, you know, people buy it, but you can't store the price. The price is there at a moment in time, and it's just based on supply and demand. Why do people demand Bitcoin? Well, because they think they're going to get rich holding on to them. So as long as you have this mentality out there that the way to get rich is to buy and hold Bitcoin, well, Bitcoin will have a price. But I think at some point, you're going to run out of fools, and, you know, the bottom's going to drop out of the market. People are going to want to get rid of Bitcoin because they're going to want to buy stuff. And they can't do it with Bitcoin, and they have to sell, but somebody has to want to buy. And if nobody buys, well, the price collapses. Whereas with gold, there are always buyers. You know, you have a whole industry that needs gold, that buys gold all the time. You have central banks that are constantly buying gold as an asset to hold on their balance sheet. But there is no natural buyer for Bitcoin. There's just speculators. So I think it's unfortunate because a lot of people who have correctly diagnosed the problem, understand the problem in our monetary system with fiat money, and they've just done the wrong thing. They bought Bitcoin, which they think is digital gold, and I think is fool's gold. They should own the real thing. But of course, nobody should have all their money in gold. I mean, I don't have all my money in gold. I have a small portion because I like to own productive assets. I like to own assets that pay dividends or yield income in some way. That's why most of my money is just invested in stocks, in equities around the world that I think represent good investment value, where you can get a good return. But also you have a hedge against inflation, because I think inflation is the big threat. It's not just a threat in America. It's a threat all over the world. All the central banks were doing quantitative easing. That's inflation. That's a euphemism for inflation. They all kept interest rates too low. So we're all experiencing the consequences. But what I think is going to be a unique American problem is going to be the loss of the dollar's reserve status. And a lot of people say, well, that'll never happen because what's going to replace the dollar? The euro's not good, the yen's not good. And I agree. I don't see another fiat currency that should replace the dollar. I just think that no fiat currency should be the reserve. I think we should go back to gold, and I think we will go back to gold. That's what we had before the dollar. And the only reason the dollar became the reserve currency in the first place was because it was backed by gold and redeemable in gold. And so I think the world is heading back in that direction, and that is going to profoundly impact the United States to a much greater degree than the rest of the world. In fact, a lot of other countries are going to be positively impacted by that transition because they're not going to have to support the U.S. They're not going to have to earn dollars by running trade surpluses with the United States. So we're going to lose the benefit of access to cheap foreign goods and foreign capital. And so that's going to mean a big decline in the American standard of living. And it's going to be a big decline for investors who have U.S.-centric portfolios, who have portfolios that are just overpriced U.S. bonds or U.S. stocks. I think the way to prepare for this is to invest in the economies that are going to improve on a relative basis. They're going to see a rising standard of living where their consumers are going to have more purchasing power. And so businesses that are satisfying their needs are going to be a lot more valuable and have a lot more income to distribute to shareholders than companies that are focused on the American market where Americans are broke.
Thanks for tuning in today to gain valuable insights into the current state of the economy from Peter Schiff. To recap, Schiff highlights the grave concerns surrounding the banking sector, emphasizing its increased vulnerability compared to the 2008 financial crisis. He warns of the potential consequences of keeping money in banks and advocates for diversifying investments, including considering alternatives like gold. Additionally, Schiff critiques the perception of Bitcoin as digital gold, urging viewers to reevaluate their investment strategies. As we navigate these uncertain times, it's crucial to stay informed and prepared. If you found this discussion insightful, don't forget to subscribe to our channel, like this video, and share your thoughts in the comments below. Your feedback is invaluable. Thanks again for watching, and until next time, take care and stay financially savvy.